Back to Live at 5. I'm Alan Van Zandt. Time now for our weekly update from Edward Jones. Some tips and tricks in the financial world to help us through life and into retirement. Joined now by Gabe Rockers. Good afternoon, Gabe. How are you doing?
I'm doing well, Alan. And yourself?
I'm doing fine, thanks. Now, one thing that we've noticed through this economic recovery since the COVID pandemic hit is a lot higher prices at the supermarkets, at the car lots, everywhere. Inflation approximately 6% this year, which is higher than it's been in a long time. And I know that's something that you all keep very close focus on for long-term planning.
Yeah, absolutely. COVID was a perfect recipe, I guess you might say, to create inflation. And so to first understand what inflation means and how it came about is traditionally it's basic economics. Too much money chasing too few goods, or too much demand chasing too little product. And of course, when COVID hit, due to the health scare nature of the virus, we shut down production by quarantining. We provided a little stimulus to keep small businesses and individuals from kind of folding under, so to speak, and that fueled both the demand side of it and it fueled the lacking productivity side of it. So sadly, this inflation has been, I think, a little bit more persistent than the Fed thought. And so here of recent, they've been in the news talking about maybe pulling back some of their accommodation and potentially raising interest rates sooner than they had anticipated. And so I think investors need to be mindful that inflation erodes purchasing power over time. And so generally speaking, stocks are a good investment solution to help grow and keep up with that erosion of purchasing power or that inflation trend. You just have to be mindful of maybe which companies don't get hurt as bad when their prices are going up as well, which companies can maybe pass that cost through due to the nature of how high or strong the demand is for their goods or services. I would also encourage clients or investors review the bond portfolio because fixed income may be the area that could use some bigger focus in terms of what to do moving forward with interest rate risk and inflation pressure.
So while some low savings interest rates might be 2%, 3%, you're actually losing money if the inflation is at 6%. So Gabe, if folks want to talk more with you about this and inflation and everything related to planning for the future financially, how can they reach you at Edward Jones?
Great question. So there's several Edward Jones branch office locations in and around St. Joe and in Savannah. You can pull out the phone book or the internet and reach out to any one of us. We're here to provide specific, personalized, tailored solutions to our clients. And we're here to understand what's important to them so we can provide those tailored solutions.
You got it, Gabe Rockers, with our weekly visit from Edward Jones. Thanks for joining us today.
Hey, thanks for having me, and I want to wish all the viewers a very Merry Christmas and a Happy New Year.
You bet, to yours as well. Thanks, Gabe. All right, stay with us on Live at 5. We'll have more after the break.